Ladies and gentlemen, my name is Greg McCloskey from ForexLive.com. This is morning technical report, Forex technical report, where I take a look at the technicals that are driving the currency markets and some of the major currency pairs. Let's get started. We had some data come out in the U.S. Just a second ago where we saw building permits and housing starts come in a little bit mixed. We saw building permits move lower than expectations of 1.33 million versus 1.37 million. Housing starts, however, were a little bit higher than expected at 1.382 million. Housing market still continues to be under more pressure than rebound, although we did see mortgage rates come down to 6% as the 10-year yield moved lower over the last month or so of trading. But that 10-year yield did find support against its 100-day moving average in trading here today, which may indicate that the low is in place. In other data that just came out, the initial jobless claims, this is the week of the BLS survey. That goes into the next jobs report, which will be released the first week in February. Initial jobs claims came in at its lowest level since April of 2022, 190,000 versus 214,000. So jobs continue to be the albatross around the Fed's neck as they see inflation coming down. We're seeing the employment rate and the jobs market remains strong, and that puts the Fed on the defensive. They're not going to sacrifice the inflation as long as jobs are at near full employment. We saw the Philly Fed index come in better, but still negative at minus 8.9 versus minus 11%. Or 11.0 expected. It's an index. We did see the Empire Manufacturing plunge earlier this week on Tuesday, but that did not roll over into the Philadelphia Fed index, which is, of course, curious. But this is a time of it seems like the market or the economic cycle where we're in this transitional phase, perhaps. We will see. So that's the data that came out, and it's causing the dollar to, looks like, move a little bit to the upside here off the better than expected data, but it's not necessarily running away. So let's start by taking a look at the euro versus US. So if we take a look at this currency pair, what do we see? Well, I'll draw a box around the where the market has been trading here. Let's put a low around 1.0775, a high around the 1.0874. Note in trading yesterday, the market had its chance to the upside. The buyers took their shot and they missed. We moved above the high prices through here. This is a nice big ceiling being developed here over the last 4 or 5 trading days. Moved above that level and failed. Came right back down. Where do we find support in trading here today against a 200-hour moving average? Not once, but twice. So there is some support down there. And as you can see, since the data this morning, we're seeing the euro versus US dollar move back to the downside, looking back toward that 200-hour moving average. The move to the upside here was helped earlier from comments from ECB's not, which threw some cold water on the sources comment from earlier this week that the pace of hikes in the ECB were going to move down. He's saying, no, I see multiple 50 basis point hikes coming forward. So that was a issue and led the euro versus US dollar back to the upside, back above the 100-hour moving average. But as you can see, the price is back below the 100-hour moving average, in between the 100 and the 200-hour moving average. Move below the 200, we're going to come down toward this floor / old ceiling area. Ceiling. Break above the ceiling. Use it as a floor. Like the move to the upside yesterday, we tried to move below this level. Sellers had the shot, they missed. They forced price back to the upside. And if we move below the 200, we're going to be looking down toward the 107.75 level and try to get out of this red box here for the euro versus US dollar. We will see, but that's the technical picture. Resistance at the 100-hour moving average. Now, it's just what it is, folks. Got to play the game that's being played. Let's take a look at the dollar versus yen. And yesterday, of course, we saw this big, huge move to the upside. That was off the Bank of Japan, doing nothing, keeping things unchanged. Market was expecting maybe a little bit more of a nudge to the upside. So we saw the yen move lower, and that took the price above the 200-hour moving average into this swing area through here. A lot of different swing lows and highs through here, but the market found sellers and moved back below the 200-hour moving average. That's a green line in this chart right through here. And once it did that, we started to see more selling. and then we fell below the 100-hour moving average here and after finding support against it a little briefly here, and not being able to get back above the old low through here, and the 38.2% retracement right through here, and these highs right here as well. The inability to do that on this move to the upside sent the price back below the 100-hour moving average, and we ended up rebounding into the close and back above the 100. But as you can see, we're trading above and below that 100-hour moving average. The data this morning tried to push the price back above the level, but as you can see, we're trading right back below the 100-hour moving average, trying to find its feet under itself. Doesn't know if wants to go with what the Bank of Japan is saying, or the market is defining what the Bank of Japan is going to do down the road. That is nudge up rates, move rates higher to prevent inflationary pressures that are starting to build up a little, even in that country, which tends to have a lower inflation rate as a report. So we'll see, but trading above and below the 100-hour moving average. Again, pick your flip the coin, pick your spot on the downside. If we move below the 126.10 level and stay below that level, it might be a signal for further moves down toward our lows. We'll see if the market moves above this level. 38.2% retracement, and this 129.49 level is becoming increasingly important on the top side. As long as we remain probably below that level, it's probably more bearish out here for the dollar versus yen. Let's go with what the flow has been for a couple months now in that currency pair. Let's take a look at the sterling versus US dollar, and we'll put it on the 4-hour chart here first. We went up and tested the high prices going back to December, mid-December, earlier December, near the 124.45 level. The high price reached 124.34, so about 10, 11 pips short of that high, and the market started to rotate back to the downside. Let's just switch it to the hourly chart here. On the hourly chart, let's put a Fibonacci retracement of the move up from this low right here, this most recent low here after a consolidation corrective move. And we're staying above the 38.2% retracement, which also happens to correspond with this high price right through here. That was from Tuesday's trade at 123.02. So let's earmark that level as a level that we need to get to and through. If the market can't get through the 38.2% retracement of a move to the upside, even this is an interim move to the upside, it's not the total move to the upside, then guess what? The sellers aren't really taking control. This is just a modest correction in what is a bullish market, and we'd expect to see something like that. If it moves back below the 38.2% retracement, then we look toward the 100-hour moving average, of course, and then we'll see what happens against that level. We tried to move below it on a number of different occasions through here, so and then found support right here before the market moved higher. So that 100-hour moving average is going to be another key barometer on the downside if we need to get below it in order to push the price to the downside for the sterling versus US dollar. So there you have it. Look at some of the major currency pairs. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.